You're watching Inside Automotive with Jim Fitzpatrick.
2023 was quite a year in retail automotive. Joining us now for a look at 2023 new vehicle auto sales and an outlook for 2024 is Cox Automotive senior economist, Mr. Charlie Chesbrough. Thank you so much, Charlie, for joining us here at CBT News. It's always a pleasure catching up with you. 2023 was an incredible year. Dealers were pretty happy with it overall, right?
I think so. We did see profitability did start to suffer a little bit. We're starting to see that in some of our dealer sentiment indexes, as well as some of the changes in pricing that we're seeing out there. But on the whole, I think with all the bad economic news that we saw for the year and we're expecting for the year, the fact that the retail market held up as strong as it did, I think we were all pleasantly surprised.
That's right. In the beginning of the year, we kept hearing, the R word, recession's then we heard about a soft landing and a hard landing, all of this kind of stuff. And it just never really, nothing like that came to fruition, did it?
Well, certainly not within the vehicle market. And I think one thing we saw is that even though interest rates and prices had gone up so much, there was such a short supply from 2022 and so many folks that needed personal transportation that even those big headwinds weren't enough to keep the market from growing last year.
Yeah, for sure. Well, with 2023 now in the books, what do you see or in the data that could be encouraging or worrying in terms of a sign for 2024?
Well, I think one of the encouraging signs is we ended the year on a very strong note in December. Sales for the month were the strongest that we've had all year. We had a 15.8 million SAR. I think it certainly surprised to the upside for most analysts out there. So I think a good way to finish the year and strong momentum. And I think maybe some of the slowdown that we saw in previous months was really more a reflection of the UAW strike and its impact it was having on the Detroit 3 than really any sort of a downturn in the market or consumers kind of turning away from the new vehicle market.
Sure.
So I think we ended on a strong note. And when we look forward into 2024, we're cautiously optimistic because we think the buying conditions are starting to move more towards consumers' favor. And one of the things that we've been dealing with in the post-COVID market was lean inventory. That's not a problem anymore. Inventories are back across the board. Dealers have plenty of product available now. And as a result of that product coming back, incentives have also come back. And so we're seeing that there's a little bit more negotiation going on, a little bit more discounting going on. So all of that should help the retail sector here in 2024.
Yeah, for sure. What is contributing to the improvement in sales, and what's needed to push sales volume higher? What do you think is feasible in the current market?
Well, one of the big stories of 2023 was fleet sales. And that doesn't help the dealer market too much, but many of the manufacturers were very aggressive with the rental car companies, as well as some commercial fleet and government fleet activity. And that really helped contribute quite a bit to the year-over-year sales gains that we had. In fact, the retail side, retail purchasing and leasing was only up about 9%, while the fleet side of the business was up about 35%. So overall, we saw about a 12% gain in sales, but the fleet side was what was really moving the needle this last year. We think it's going to be tough to have more growth from that sector going forward. We still see strong fleet, but there's not going to be quite as much pent-up demand because the fleet sector had been kind of starved a bit in the lean inventory environment as the manufacturers wanted to keep products with the dealers. So they're kind of filling up some of that pent-up demand on the fleet side. That's probably not going to be there as strong here in 2024. So the manufacturer is going to be relying even more on the retail sector. And so my expectation is we'll see incentives get quite aggressive here through the course of this year to try to move the metal.
Okay, that's interesting. So the fleet sales also helps in the way of used cars, because now if these fleets are building back up again, they got to send them to auctions and such, and all of a sudden now there's a plethora of used vehicles available for dealers, right?
We already know though that the used market is going to be a bit tight here over the next couple of years. The inventories are still relatively lean. And the prices are still relatively high. They've been coming down, so we expect more sales, but we're not going to see quite the growth on the used side as we're probably going to see on the new side here this next year.
Okay. And when looking at sales performance in 2023, what manufacturers stand out for you, and why do you think they perform so well?
Well, there's a couple of manufacturers that had a really fantastic year. I think we probably got to say General Motors is maybe the winner because they did have a strong year-over-year sales gains. They're the top manufacturer selling in the U.S. market. And certainly they had increases when some of their competitors like Stellantis had decreases on a year-over-year basis.
Yeah.
But I think the other big story was certainly Honda. They had the biggest market share increase last year, well over 1% gain in market share.
Wow.
And that was really important for them to recover a lot of the lost ground that they had in 2022 when the inventory shortage hit them rather hard. So I think Honda is another one that had a good year. And of course, Tesla is still growing. They had nice year-over-year gains, another 25% increase in sales year-over-year, continue to gain market share. They've moved ahead of Volkswagen Group in terms of their position in the U.S. market. And probably within the next 24 months, they may move ahead of Nissan here if they keep the pace that they're going so far.
Wow, wouldn't that be something? So based on how December ended and what you've seen so far this year in this short period of time, in this January, how would you characterize the new vehicle market for 2024?
Well, as I said, we're cautiously optimistic. We still think that there's room for growth here this next year. As I said, we see that the buying conditions are going to be moving more favorably towards the vehicle buyers. Interest rates are starting to come down. There's talk that the Fed may actually be cutting rates later this year. We can keep our fingers crossed, but whether they do or don't, we do see that the interest rates in general are coming down, certainly on some auto loans from their peak a few months back. Mm-hmm. And as I said, the incentives are starting to go up. We're in a much different situation today than we were just 12 or 18 months ago when it was essentially a seller's market. There was no negotiation to be had. The MSRP was the price. Well, it's different today. Everybody's a little bit more willing to negotiate on that price. And so all of that should help make more deals happen here in 2024.
Sure. That's great. How much of an impact does the fact that it's an election year have on the overall scheme of things here?
I've looked into that question before. Do we see more or less activity in an election year? And it's really hard to kind of quantify the election impact itself. Yeah. But I will say, in general, I think it just kind of goes to people's nerves a bit. People, they want security in their outlook. People that are uncertain about their economic future aren't going to be taking out a big $50,000 car loan if they're not confident in what the outlook is.
That's right.
I think it's maybe even less the outcome itself that can disrupt the market. It's more just the fact that we don't know what the outcome will be that just adds to the uncertainty and maybe makes people a little bit more apprehensive about making a big purchase.
Yeah.
But thus far, it seems to me that the vehicle, that's not going to disrupt the recovery here this year. I think we're going to see sales continue to hum along election year or not.
Sure. Do you think we'll see leasing come back at the rates we saw prior to COVID hitting in terms of the 30+% of the...
That's a tough one. We definitely expect leasing to be higher this year. We think the manufacturers are going to try and leverage it a bit more, push it a bit more through more subvention. But I don't know if we're going to get quite back to those levels. It's certainly going to take us a couple years, I think, to build back to that. But we may see that in the EV sector. In fact, EV leasing may be even higher than sort of our 1 in 3 sort of rule of thumb because of the Inflation Reduction Act and the credits that are being given.
Yeah.
The $7,500 credit. That's a big capital cost reduction that makes that lease quite affordable for many of those EVs. So I think we'll see many manufacturers try to leverage that here in 2024.
Yeah, for sure. And then, of course, where we stand on EVs is a whole nother show, right?
I'm sure they can spend a whole hour on that one.
Charlie Chesbrough, Senior Economist for Cox Automotive, thank you so much for joining us here on CBT News. It is always a pleasure catching up, and we appreciate all of your content, your insights for our viewers. Thank you.
All right. Thanks for having me, and Happy New Year.
Thanks. You too.
Thanks for watching Inside Automotive with Jim Fitzpatrick.